Hello, everybody. Today I want to introduce a fifth forecast, and that I think there's a 70% probability SPX reaches at least 5,500 points by December 31st, 2023. So if we look at the charts here, I basically think that we are going to do a 27% increase in about 1 year and 11 months. So something like that, right? In 5,500 points. And I think that's what we could do at the very, very minimum, at least this much. And so for those of you that are watching in the future, currently the common narrative is that the Federal Reserve are going to raise interest rates, and that's going to cause stocks like the FANG stocks and non-profitable tech stocks to go down a lot. And it's going to bring down the NASDAQ, it's going to bring down the SPY, there's going to be a big recession, yada, 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 yada. And people are worried about Ukraine and stuff like that. And so there's a lot of fear and there's a lot of pessimism in the market, mostly because people can't believe a rally like this happen and they are expecting this bubble to pop. Although I think they are correct that eventually it will, I think as per usual, they have the direction right, but they are just way too early. And so basically, I'm expecting a move like this. I'll just draw it out. I don't know when we're going to bottom in the stock market because we've done a little like 11, 12% pullback. We might have bottomed, who knows? But I think we're going to do something like, it's going to be kind of a struggle, but I think eventually we're going to get up to 5,500 and we're going to get into the zone where I think we're going to have resistance on the logarithmic charts here. And we're going to go down, hit the resistance, and we're going to try to fight it, but eventually we're going to go down and we're going to have what I think is going to be at least a 10-year period of relative underperformance in the United States stock market. So I think that's my analysis based on the logarithmic chart over here. And also on just a more personal note, the past year or so, I have begun to become pretty skeptical of what most people say about anything with markets or history or geopolitics and stuff. And what I am more skeptical of is not the facts, but mostly their analysis of the facts. And I'm mostly questioning what if they have looked at the question and done the research thoroughly. And this idea of getting to the true fundamentals and figuring out what is actually true and how things actually work is called first principles. And that's very hard to do because we human beings, our human brain is very limited due to the way we came to be on this earth. And so we have all these biases, psychological biases, cognitive dissonance, and such. So I really respect people like, I've been really learning from people like Elon Musk, Charlie Munger, Daniel Kahneman, Jim Keller, and these guys really understand first principles thinking and getting rid of all their psychological bias. And I think a lot of people in the markets haven't done that yet. I think the fact that the majority of market participants still believe the Federal Reserve is in control of the markets and in control of the economy, when time and time again they have proven to be wrong and be more reactive. I think that's, in general, I'm really starting to believe that for the vast majority of market participants, I'd say a good 80% of what they think how the markets work and what this is and the fundamentals is actually not true. If you break it down to its most fundamental layer, I think 80% of what people think is true is actually not true in like the economy and in the financial market. So, of course, I have my own bias. Nobody is immune to these biases because we're all human, but I try my best to get away from these things and not, as Charlie Munger say, be a part of the folly. And I do that by trying to look at as much data as possible, as much from many different perspectives, and I try to always question myself and etc., stuff like that. So I hope you can do the same because it's been very helpful. I literally realized that a good 90% of things that I thought were true were actually not true. Like, for example, what an economy is and what economics is and what money is. Money is actually psychological. Economics is actually the transfer or distribution of matter and energy. It doesn't just relate. It's not just social science. So anyways, that's my video for today. That's my forecast. 70% probability. Pretty confident about it. And if you like the video, please like, please subscribe, and I'll see you guys next time. Bye.